Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EEKA Fashion Interim Report. EEKA Fashion Holdings Limited offers a diverse range of businesses and services, including design, promotion, marketing, retail, and wholesale of self-owned branded ladies, wear products, trading of garments and ladies wear fashion creation, and design activities, brand promotion services, software design services, property leasing services, operating an e-commerce platform, EEKA Fashion Mall, providing products through various channels, plus retail stores, plus third-party e-commerce platforms, plus distributors, plus direct sales through promotional activities. The stock price of EEKA Fashion has dropped significantly in the past year, with a decline of over -13.02%. Several negative news events have contributed to this decline. In February 2025, EEKA Fashion issued a profit warning, citing decreased product sales and increased marketing expenses. The company's annual results announcement in March 2025 revealed a 43.06% decrease in profit and a 4.68% decrease in revenue for the year ended December 31, 2024. An analyst report in April 2025 highlighted challenges such as increased inventory levels, sluggish sales, and higher marketing expenses, leading to a cut in the target price. Additionally, an executive director sold a substantial portion of their holding in September 2025, which can sometimes be perceived negatively by investors. The general market conditions in China's womenswear sector have also been cited as contributing factors to EEKA Fashion's decline. The company underperformed both the Hong Kong specialty retail industry and the broader Hong Kong market over the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth is primarily driven by the launch of new brands, acquisition of existing brands, expansion into e-commerce platforms, and increased presence on emerging e-commerce channels. Additionally, strong product positioning and marketing efforts have contributed to significant revenue growth in certain regions such as Eastern PRC. On the other hand, revenue decline can be attributed to market challenges, weak consumer confidence, sluggish domestic demand, deflationary pressure, luxury consumption decline, and increased price sensitivity among Chinese consumers. Furthermore, declines in sales at existing self-operated retail stores and low market confidence have also contributed to revenue decline. The company is generating a significant increase in positive operating cash flow, with a notable jump of RMB 443,000 and 28 from RMB 451,831 in 2024 to RMB 895,859 in 2025. This substantial growth indicates a strong financial performance and ability to generate cash from its core operations. The company's debt level and interest expenses have undergone significant changes in recent years. While total debt has increased by RMB 43,068, interest-bearing bank borrowings have actually decreased by RMB 44,068, indicating a reduction in the amount borrowed. Finance costs have also decreased by 14.56% to RMB 23.47 million. Notably, interest expenses paid have seen a substantial decrease from RMB 10,537 in 2024 to RMB 5973 in 2025, a drop of RMB 4564. The gearing ratio has also decreased from 11.65% to 10.61%, indicating a more manageable debt-to-equity ratio. However, the interest coverage ratio has declined from 15.35 to 11.13, suggesting that the company's ability to cover its interest expenses with earnings has weakened. The financial performance of various segments and regions has been mixed in the recent period. On the positive side, Courrier retained its leading position with a relatively small decline in revenue of 1.22%. La Courrier also showed impressive growth of 9.65%, while NEXY.co remained resilient despite a decline of 4%. However, several segments and regions underperformed significantly. Elsewhere fell sharply by 21.89%, followed closely by CADIDL with an 11.73% decline. FUNNY, FELLN dropped by 9.85%, NAERSI experienced a 10.85% drop, and NAERSI-LING was down by 12.67%. These poor performers will require attention to improve their financial health. Management is cautiously optimistic about the company's outlook. They attribute the slow economic recovery to weak demand, but expect consumption to be boosted by government policies. Companies prioritizing product quality and emotional value are likely to recover first. The company aims to strike a balance between growth and profitability, with financial performance surpassing peers while maintaining stability. The company has a history of paying dividends to its shareholders. Over the past 5 years, it has maintained an average dividend payout ratio of 50%. The dividend amounts have fluctuated from year to year, with HK $48 in 2021, HK $40 in 2022, HK $70 in 2023, and HK $38 in 2024. In addition, the company paid out significant dividends in 2025, RMB 228,285 million, and 2024, RMB 442,383 million. That concludes the financial summary for EEKA Fashion. Feel free to comment below, and I will be happy to answer them when possible.